here's the pernicious thing about it. I've literally brainwashed you into thinking that asset inflation isn't a bad thing, it's a good thing, and it isn't inflation at all. It's actually investment gain.
On the podcast, he points that Bitcoin has surged in recent days, currently trading upward to 44,000. He also explains how with all of the political turmoil going on in the world right now, Bitcoin is one of the safest places to protect against cyber attacks. He also went on to talk about another hot topic that is still on the top of everyone's mind, inflation. Saylor mentions how we, as a society, have been brainwashed about how we think about inflation. Saylor insists once we really understand how to look at inflation, we can use it to our advantage to become richer and maintain our wealth. Have a listen to what he has to say.
Inflation and diversification are both bromides. There are these simplistic terms that people toss around, but no one really thinks very deeply about them in my experience. I mean, let's start with inflation. Inflation is not 2%. Inflation is not the CPI. It's not 7.5%. Inflation, properly understood, is simply the rate at which the price of anything appreciates in the currency, which is the frame of reference, which means that you can calculate an inflation rate for a Picasso painting, which is different than a building in New York, which is different than a bond, which is different than a market basket of goods and services that you wish to buy, which is different than the market basket of goods and services I want to sell you. So what's the real inflation rate? It's a vector. Once you understand that, you realize that there's probably two inflation rates of interest. One inflation rate is the rate at which cost of living is going up for a middle-class family. That's not the CPI, because the CPI is a manipulated market basket set by a politician or a bureaucrat that is engineered not to go up in price very fast. Most average people would find that their inflation rate is higher than the CPI. And if, for example, we don't include the cost of buying a home in the CPI, even though it stands to reason that just about any reasonable person would want to buy a house at some point in their life. So you can calculate a consumer inflation rate, which is different than CPI, but you can also calculate an asset inflation rate. That's the cost of getting rich or staying rich. If you want to be wealthy, it's not good enough to keep up with CPI. You have to actually keep up with the rate at which assets are appreciating.
The lucrative income is what attracts people to trading without them realizing that it requires a lot of time and effort before they can actually make money. Finisol lets crypto investment enthusiasts copy experienced traders and profit effortlessly, simply, and automatically, while keeping their assets in their exchange accounts. Finisol is a passive, fully automated crypto copy trading platform and a verified Binance partner, where traders can scale up their profits and investors gain without trading. Finisol also supports KuCoin and will soon support other major cryptocurrency exchanges. Join up and let our traders' profitability surprise you. Use the link in the description to sign up.
The cost of housing went up 18.8% year over year. That's Case-Shiller, according to the Case-Shiller index, right? That's another. That's a common asset. But if you look at the S&P index, which is a market basket of desirable companies, that gives you a surrogate for a monetary inflation rate. The monetary inflation rate's been running 7 to 10% a year in the US at the same time that the CPI has been running 1%. If you understood that, you understand that your cost of capital is more like 10%, which meant that any investment you made that didn't yield 10% was making you poorer. You were losing wealth. Any business person understands that. I couldn't get you to accept a 2% ROI on an investment. So if you understand inflation's a vector, then you start to realize that the inflation rate in Miami Beach is different than it is in Kansas City. And you understand that the inflation rate, if you want to stay wealthy, is much higher. The inflation rate in 2020 was about 25% for assets. The inflation rate for bonds was at one point higher. So once you understand inflation is a vector, then you stop paying attention to just one cherry-picked number, because what you realize is I can manufacture any inflation rate you want simply by adjusting the market basket of products and services. And by definition, if I never include assets in the market basket of desirable goods, then you will always ignore asset inflation, which is the most pernicious inflation. So we have had hyperinflation since 1971, but the inflation has manifested itself in the assets. And when I convince you that a bad thing is a good thing, right? We've come to a bizarre point. So we're living in inflation since we went off the gold standard. It's just manifested in the assets. We have hyperinflation right now. It's just manifesting itself in the assets more so than in the goods and services.
If you want to listen to the full interview, click on the link provided in the description. We would love to hear your thoughts. Comment down below. If you're new to the channel, don't forget to hit the subscribe button and bell notification. Thank you for watching Daily Dose Crypto.